Welcome back. Another insane week is just about under our belt, and tomorrow's about to get a lot hotter. Man, we got some fun stuff, but really a time to be cautious and look at some of the long-term stuff. So we're going to start kind of shifting that focus for this week anyway to more long-term stuff versus some short-term swing trades like we have been. And we can review a few of the ones we've looked at before as well. And we were coming up with some pretty interesting topics about what to expect from not just the Jackson Hole situation, but you had another view that not many people are really looking at that they should be a little more concerned with. And I'll let you elaborate with that because that's
Yeah.
huge.
Yeah. So not only is Powell talking tomorrow, which we know,
Oops.
which is going to be important. I mean, he's going to tell you he's going to cut in September. We still don't know how much. But Ueda from the Bank of Japan is also talking. And if you remember the Black Swan event, and I say that jokingly, that we had a couple weeks ago was supposedly caused by the Bank of Japan. So that's going to be a real interesting talk, and I don't think it's on a lot of people's radar screens. So I put out a note this morning and a tweet that just, all right, you got Jackson Hole, you got Ueda, you had the BLS numbers being revised down over 800,000, which the market initially said, hey, no big deal, but sometimes people look at something like that a little bit later and maybe that's a problem. VIX is spiking up a bit, and you've got the S&P near the highs. Also, there was an article in Market Watch yesterday quoting Goldman saying, hey, this whole rally up on the S&P, hedge funds have not been participating in it, which either is bullish because they're going to come in massively, or it's bearish. They don't think that this is a real rally and they'd rather fade it.
Right. And there's, talk of even Buffett's like sitting in a pile of cash. And that kind of makes sense that all the institutions would kind of follow that, be ready with some dry powder to take advantage of whatever direction this goes. And it's kind of looking to play out like the market's kind of been accumulating for a few days in this range, waiting for this shoot of drop, so to speak. So yeah, the VIX will tick up a little bit because volatility is going to swing in, of course, which plays hell with the options chain. So there's really not a whole lot you can take advantage of for like running QQQ and SPY spreads, or can you? I've found that I've been able to kind of work my way into like running strangles or even condors on stuff like this, and really short duration. I mean, I'm talking like tomorrow expiration or even Monday expiration on the chain, and I'll trade them at the edges. I'll run like probably $20 wide and queue here for running a condor if I was to do so. Um, there's plenty of range to move though, and let me get into a big chart so we can kind of see what we're looking at here. At least on QQQ, which is just fading a full 1-for-1 down right now, about to hit support maybe. But you get into a long-term chart, and, we've been trading the heck out of this thing. We traded this broadening channel that descended down. We traded the breakout right to the target, and the measured move target, the way we found it, hit dead on yesterday, and then today we kind of exceeded it a little bit and then dropped right back down into range. If things go sideways enough by the midday here, we should see just enough of a decline in implied volatility to get us a good entry into some possible trade from neutral positions, and that's kind of a strategy I like to use. I'll run what I call the Spartan trade. I'll run both sides of price, because if I'm expecting a big move possible with Jackson Hole and all the events leading up tomorrow, I can sacrifice the loser and ride the winner into victory, so to speak. Kick the other one down the well. But, I call it the Spartan trade. It's a bit brutal. It's a bit graphic. You got to have a dark sense of humor. Come on, guys. But long story short, it gives you an opportunity to take advantage of whatever the hell price does. You're going to run with it. And in today's market, we've got quite a bit of range. I mean, we could go and revert all the way down here to like 461 and some change on Q if things take a bearish turn. And of course, you're going to see a ton of that dry powder pour right back into the market on that after they're done fading it. That's where the institutions will be, and likely if I was to go doing some digging, that's probably about where a collar strategy would hold for midterm collars, right in that range. Running the upside, though, I mean, we could revisit the previous high. Why the heck not? It's just the same measure, if not a little bit further out from it. You know, if we were to take and draw our block, so to speak, from here to where we're at now and swipe it up above, it takes us right to that high. Kind of a no-brainer. So we got lots of range possible here. And explosive moves love to happen on Jackson Hole, but not always. A couple years back, I found a diamond pattern setup that was just perfect. I plotted every price target on Jackson Hole and scalped the living tar out of it on the ES. This year, you know, not so much different, but we didn't really have a diamond pattern. We just got this broadening consolidation sitting here going sideways and, you know, being scalped and picked to death while there wasn't much, you know, big money participation on it. So, yeah, it's waiting for the shoe to drop, plain and simple. Can we get some swings out of that? That's where we're kind of stand off a little bit because we're in a position where caution should be definitely observed. We can find a couple things to see some good swings on, but wait for that shoe to drop and get into things maybe next week as far as anything we can call out today. You got a couple on your radar, and you're looking towards the AI situation requiring a ton of energy. Kind of get into that one, if you will.
Yeah. So, you know, I'm a trader, but I have a longer term portfolio of stocks that I think are going to benefit from AI. And you know, as an aside, Larry Connors does some great research on this and has a report I think is well worth the money. But one of the areas I've been looking at is nuclear because AI is going to be such a power beast. It's going to need all of the above. And the thing that nuclear's got going for it is technically it's clean. So, you know, there are a couple smaller nuclear plays. They're going to be volatile. But yeah, I think you're going to need nuclear to get into the mix. And I think you could see some of the utility companies buy nuclear. So one of them is Nano Nuclear, NNE. That one does not have options, but yeah, and yeah, this is a long-term hold for me, but this isn't necessarily a bad spot. I mean, it's in between the 10 and the 20 day here. So, I mean, I wouldn't mind buying it here.
It's got a fairly decent swing trade measured move setup going for it. We do have the classic inverse head and shoulders play in motion here, and it's got the pullback just about to the T. This is beautiful market structure or price structure. I would say, you know, let me bump this down to like $11 exactly, because that's about where we're at for the mean of this current consolidation. So a 1-for-1 midterm swing trade would have two targets here. We got one at about $13.25, is about half a measured move up, and then we've got another one at about $15.50 for the extension to run a full measured move from where we're at. I like this setup. This is pretty good. This is a good swing. Looking at, you know, the danger zone would be getting back into a mean reversion of the previous trend. If things kind of take the south tip on the market, it will affect everything short term. All the better, because then we get a mean reversion and get in dirt cheap on this one at like 850. So if all hell breaks loose in the market tomorrow, we could see a quick swing for that. And then, yeah, I would be right there to grab that liquidity for sure myself. And I know probably any institution that's looking at this the same way would be agreeing with me on that one. So kind of watch this consolidation area, and you know, if it gives us the play to take an entry here, if things turn out positive tomorrow, we could see this start to swing up. And if things turn out, you know, to be not so positive tomorrow, we could see a quick bearish scalp and opportunity for buyers to get long on that and you know, make a good decision on long-term investment, such as you have. I like that setup though. That's a pretty clean one. And then reversion target half. We've looked at this before. Half back is like 1680-ish. That would be great. We can play with that too.
The other one, I don't like this chart as much, but again, it's a long-term hold for me, is SMR, new scale.
Ah, yes. That one
And
is,
as you said, this is one we've talked about before.
yeah, this is one where we were beating up Kramer a little bit. I want to say he said sell it, and we're like, hell no. And we were right.
I want to say that too, because yeah, it had a nice run from end of March through mid-July.
Heck yeah. And that structure setup right here, this wedge break was just freaking methodical. I mean, it gave us everything we wanted. Came back, it grabbed liquidity for a mean reversion, sort of like we're pointing out on the other one there. And it just continued to melt on up, went right through a mean reversion and just kept on climbing. And then I always, later on, I threw the angular in here. And of course, we're back into playing with accumulation right around that angular. So I'm thinking we could see this thing accumulate, break back above. If things go right tomorrow, we could see a nice long-term entry on that. In the short term and near term, kind of consider this move right here. This is a little choppy to read, so bear with me if I'm kind of eyeballing this as we speak. But worst case scenario, we get an opportunity to grab, down here at like 7.90 or $8, but it's likely to hold here at about half a move, so like maybe around 8.40, 8.50. If things get out of hand tomorrow, we'll get that dip opportunity and be a good BTFD situation.
You may not have to wait till tomorrow for things to get out of hand. That may happen today.
MA, MA, it's looking QQQ is kind of doing some fun stuff. I just watched. Um, we could be seeing some good opportunities out of this, and I like the long term look on this thing. This thing looks pretty clean. And then you had one other thing to look at.
Yeah, also an AI play. This one is Tempest, simple symbol TEM.
Gotcha.
And what's cool about this, so Jensen came out at some point and said he thinks the future is digital biology, basically using AI in biotech. And, we're probably a couple years away, but there's already, I mean, every day you'll see articles like, hey, this company's got technology that can diagnose cancer 10 years ahead of time using AI. This is a digital biology company, recent IPO, long-term hold for me. In the better be to be lucky than good. I've been traveling the past couple of days. So this morning I go and I look at my portfolio. I'm like, you know, this is a long-term hold, but I'm up like almost 500%. I'll take some profits this morning and, no timing or anything like that. I just 9:35 or so I take some profits, and then immediately after I finish taking profits
Bam.
drops 10%. So
That was nutty.
better to be lucky than good sometimes.
Sometimes, and it may even take a trip down to next key support down here around 59, $60 or so. If things fall apart tomorrow, I could see that definitely happening.
Yeah,
And
I mean, I'd be looking to buy dips in this name. Right now this is pretty much the only company in digital biology that's doing well. We may do a digital biology ETF at some point, but I got to wait for the other companies in the industry not to suck.
right, and you got to get a little bit of the suck out of the way first. Unfortunately, I love to look at these when I'm estimating a wedge here. This is kind of guessing a little bit with price action, but if things come back above this regression line here, we could see, like tomorrow, we could see something like an impulse move either up or down in this range. And I like to measure that because later on, if we get the wedge, we'll usually be able to pick off a breakout and then confirm it. So like oftentimes when you see a wedge break, you'll see it hit that number, which is probably about the mean of the high to low on the wedge itself, and then you'll see it reject or pull through that measured move target. And it's funny because you can usually time these and get a killer day trade out of it and then swing trade it later. Should things start to melt back out of that range and start to run higher. Works in reverse too. If things get bad, you can see that be the tripwire too, to where if support gets cracked at the base of that measured move on a breakout, You'll see it go to the nearest reversion pivot, and there's plenty of pivots you can see on the 2-hour candles. I mean, there's stripes all over the place on this thing, but I do like it for a long term, and I think there will be some liquidity grabbing this if they get the opportunity. So yeah, have some dry powder, guys. This is going to get exciting for this space, and I can see some things starting to work out with price action too. This thing's kind of a recent IPO, so we won't have a weekly chart that's worth a damn on it, but so far the
Right. Not yet.
daily chart looks pretty impressive. That's pretty rare for something like that. However, if things get kicked down a row, things start to get overregulated, we'd like to say. Market structure is always in play, and sometimes when you see something get hyped a little bit too fast, if it starts to trip some serious support levels, you'll see capitalization. It'll run, typically back to its low range or 52-week low, or in this case, back here to like June lows. That is possible, so always be ready to have a stop loss and effect on this thing should things fall apart completely, or not necessarily fall apart, but just get capitalized. So we always cautious with IPOs, but so far this looks pretty impressive. It looks like we got a good setup here, but always be ready to completely reject your trade idea should things fall apart. Always have a plan to exit for minimize loss should that happen. It's a lot to say. And
Yeah.
you get into trading and you start to realize that you can just glance at a chart and kind of pick that stuff off. You can put the plan together over time at a glance and know that, okay, well, I'm going to get out if things go bad here. And that's something you got to ideally write down, or so to speak, set in stone with your trade plan, so that that you're not going to sit there and FOMO and be like, it's going to go back up, and then you end up down like 50-80% holding the bag, and you just join a large crew of people holding the bag. It sucks. It's better to just protect your capital and find something else to look at and run with that. So be sure to stick to your plan once you establish it, and over time you get good at this. You can be able to glance at a chart and be like, I'm going to get out here, I'm going to get out there, or whatever. Make sure those are definite statements that you make to yourself, and write it down, put it in writing. Couple of things I was looking at, and I'm not really looking at much this week because of the whole Jackson Hole thing. This morning we had a earnings announcement come out on an automotive supplier, Advanced Auto Parts, and man, that thing just set foot right on its low. Looking back here, I mean, it hasn't been this low since back in 23 here last year, around October. I have a friend in this one. If you're listening, I hope like hell you heeded my advice and started talking to a financial advisor back in October of 21. She had enough to retire probably 3 times over in her 401k on this thing back then. I said, man, the writing's on the wall for a reversion. This was market structure at its finest. And there's your capitalization, guys. If she woke up this morning and looked at her 401k, she'd probably be in tears because it's a substantial hit. However, I like this thing for a long. I'm looking at this to maybe give us a reversion trade later on. This is pure market structure. We got the hype wave, we got the capitalization, we got the accumulation. 1, a short squeeze for a reversion. 2, that's happened. 3, we've come back to support. I'd like to see it trade in this range for a little while longer and then start to see some swings for full reversion. Maybe get back to the weekly 200. Pardon me, voice is failing. Or even go for upwards of $70 on this thing. After a dead cat like this, the short-term stuff is going to be radical first. This morning we traded the crap out of this thing. We got long down here, took it to the pivot, took the measured move up to liquidity. I mean, just perfect reversion, dead cat bounce trade. We day traded the crap out of this. We're not the only ones doing that. There's a lot of people who are going to take advantage of this volatility. But the dip buyer crew, or the people who are holding dry powder for something like this, realize that there's some things happening in the automotive space. Not many people are taking these car loans at such a high percentage of interest rates. 1, 2, the default factor is starting to really take hold. The consumer's been in trouble with liquidity. Not the greatest time to buy a new car. Maintaining your old car is going to be the name of the game. And these guys supply parts to a lot of shops. And if servicing and repairing your car is inevitable, this will bounce. I've got a pretty strong feeling about that. So I like the dip buying opportunity here, and I'm going to start looking for some long-term swings. I'm looking at 45 DTE debit spreads. I'm looking at maybe running a wheel on this. I got to free up some capital to do it. This is a big number on me. I got a lot in TNA, more than I should probably. But I'm looking at an opportunity to maybe wheel this. I don't like the open interest very much. I don't like the yield very much, but it's a company I believe in. I think they're going to do pretty well once they get through this neck of the woods, so to speak. So I think long term this could be a good dip buying opportunity for these guys. So stay tuned for that one. I think we're going to capitalize a little bit more or consolidate in this range for a little while longer. Let the day traders have it, but eventually look for this thing to be some good long term bullish opportunities to bounce back for at least reversions. Good trading. Another one I kind of peeked at was Apple, and we talked about this together a little bit. When it comes to the AI space, and this is kind of the, I guess we could call this the perspective of the opportunist here. If things go right with AI and energy is supplied and things start to move forward, Apple's going to be huge, And I can see this setup is basically it's choppy. You got a nice measured move up. We've made the reversion trade. That low was the dip to buy, and now we're coming back into consolidation. So if things fall apart tomorrow, I'd like to see Apple come back to 220 and give us some bullish swings coming out of this. Might be a good dip buying opportunity as well. I could be wrong. It could just rip the face off and make a full-on 1-for-1 and run away without even taking a breath, so to speak. But it's pretty in tune with coming back to that 220 for a little time first, I think. Also, that's you watch the 10-day or the 11-day. It's
10-day. Yeah, it's sitting on the 10. Yeah, I mean, it's sitting on a bunch of moving averages right here.
And 220 would be closer if we give it a couple days to the 20 period ish. I kind of like 220. It's a good solid number for a good dip buying opportunity with Apple. So I know there's a whole lot of fanboys in Apple, but things are looking up in the long term for that one. I mean, it could very easily pull in Nvidia at this point if things go right. Plus, I mean, hell, even the marketing revenue that could come from this, because your phone knows a lot about you. Everybody's got one. Apple's one of the companies that definitely takes advantage of that database, and you plug AI into that equation, and things can really, really go well for Apple. So, I mean, you could start seeing.
I mean, just imagine AI integrated into 1.4 billion iPhones.
Yes.
All of the avenues that can go, and all of the ways that Apple, assuming Apple, does things the right way, all the ways Apple can make money based on that. And you think Apple is big now, Apple could be completely and totally dominant. And Amazon is probably similar, but we don't carry Amazon around with us. We carry our iPhone.
Pretty much. I mean, it's in your pocket, just collecting data, and like you say, you plug in
More,
AI.
more than you realize, most likely.
Yeah, as they say, I don't want to say it because I have one in the background here, but those things listen. They're always listening, and it's not just for it's not like designed to rat you out. It's designed for marketing. That's where the money is. That's what they want. The NSA doesn't give a damn. They're not going to pay the bills. So you start thinking about it. Just the marketing potential alone in this AI switch is huge. I mean, just massive. And then crunch it down and actually be able to take the metrics and convert them into some meaningful data. That can be a good focus too. So lots of other companies will be benefiting from this. So look for some dip buying opportunities in Apple. If things kind of take a southward turn for some quick volatility, we should see some opportunities. And I think 220 is about where I'm looking for support on that. Thanks for the comment, by the way.
1967 is the 50-day. So
yeah. There was a comment on our live feed here. TG, thanks for the tips. I'm new to this and have been trying to absorb the info. It's a lot to take in, believe me. But welcome, and we love this journey as much as you're gonna love it. And over time, we're gonna do everything we can to help as many people as we can, and that's why we're here. Um, if you had paid attention to our show from, we used to pick on Kramer quite a bit. In fact, we literally took Kramer in the ring and beat up his watch list every week. And our accuracy on our call outs, the stuff that we picked out that was actually worth trading that Kramer would mention, our accuracy rating was about 94%. And we're continuing that with our swing trading outlook. We're building these watch lists. So far we're doing really good. We've come a long way with this, and we've made some call outs in the past couple weeks that hit targets just beautifully. I'll get through a few if we got them, and I think we do. TiVo was just awesome. That setup is beautiful. The cup has broken out. The handle is printed. We've got our measured move in motion. Just to follow up, our half a measured move mark has been met. There's a couple of wicks there, so there were some sellers. I guess we call that a win because we were accurate about that. The outlook on this thing for an extension is like, $21, but $20 would be a full extension here. I think would be a safer bet. Just to kind of follow up, look left, look way left, and reversion target is way higher than that. So if TiVo starts to really pick up steam, watch for a break above $21 here, about where that red mark is, and see if it can swing higher. But for now, our short-term outlook was spot on. We've started talking about this a couple weeks ago, and it's just following through beautifully. So we'll break our arms, patting ourselves on the back for that one. I think we did good. Short-term stuff, we had SEA here. That was one that worked out for market structure. We had the capitalization and the accumulation. We got the first squeeze. The second squeeze went underway. We've kind of had a target outlook of possibly pulling up to like $86 here. Looking at our daily, it kind of fit the bill. The short-term measured move just about played out. Almost came to target. Found some sellers here just shy of it. This might be a good time to take some profit on that one. If you got with us on our long outlook on that one, you did well. And again, we'll try not to injure ourselves, patting ourselves on the back. You're welcome. Our accuracy's so good, we can be cocky as hell. We don't care. You know what? We're not Kramer. We're the opposite of Kramer. We're good. So
yeah,
we're here for a reason. We're making all of our bills paid by what we do, and we want to help people get to that level. So that's why we're here. So everyone else would say the cliche, like and subscribe, hit the bell, and all that stuff. No, we're about tell your friends, because we're growing, and we're giving this to everybody and their mother for free online here, right on our YouTube channel. Enjoy, come see us. Couple others to mention. We got Salesforce here. That was fun. That dip was awesome. We've been keeping with this for a couple weeks now, and it's done pretty much what we expected. It came kind of back up to this level. We got a broadening pattern here in a bad place. This might start to melt down. So we were right on the.
Looks like a short here to me.
For sure. We were right on our short-term long position. I think we're out of gas here, and we were saying watch for it to run out of gas in this level, and there it is. There's your short opportunity.
It did exactly the 200-day and ran out of gas.
Yep. We were on it. We did have a nice bearish engulfing candle to boot the other day, a nice close, and we're looking for a reversion trade on that. We'll probably see about 250 for a reach on this thing for half back of that trend. From there, it can certainly go lower, but watch for this pattern to complete. And I'm just going to go ahead and draw the damn thing. It's pretty obvious, but you get to glancing at a chart, you take it for granted. You can pick off the setups pretty easy, but not everybody can do that, and I understand. A lot of people just see some squiggly lines and stuff. That's okay. You'll get to that level. But pretty simple broadening pattern, reversion targets here. That's your regression line. Watch for some support between 250 and 245. Maybe we'll get one more opportunity to go long, but if it breaks that, hell yeah, we'll stay short. We could go all the way down to this measure move base. Why not? This has been one hell of a spectacular trade on the upside. Reversions are always likely. We tapped it once with a wick. We can do it again. Break this line and we're going, baby. So good short opportunity on this one if you do play that way. put debit spreads if you don't have the capital to short this outright. They're pretty easy to get and reasonably priced. We can get some good, $5 wides for reasonable risk. My appetite is always very little risk, and I see some $5 wides on this one in the put side that look pretty good. Nvidia, another follow through. Just beautiful. Ran out of gas up here. We were pretty much expecting this liquidity zone to crunch, kind of hit this pivot, and again, big old broadening pattern right at the top of a bullish trend. Likely to take another trip back to that regression line, so this looks like a good short for short term.
Earnings are next week.
Yeah.
Just so you know, that's going to be the big event next week is NVIDIA earnings.
Oh, for sure.
Right now, Wall Street is filled to the gills with NVIDIA. So, every once in a while on our 2X, we've got to beg, borrow, and steal to get swap exposure, and we're getting into that environment again.
Yeah, it's. Do you have a leveraged short? ETF
we
well.
have a leverage short, but Wall Street will sell me as much NVIDIA short as
sure.
as I can take. Then they can hedge themselves on the long side. They are filled to the gills on the long side. So yeah, we're every day finding NVIDIA capacity is fun. So far today would be a seller, so no big deal. But
yeah. I see a short-term short opportunity playing out here. It looks good. Just watch this liquidity zone and target here, target here.
Yeah, I don't know that it does a whole heck of a lot ahead of those earnings, but yeah, I could be wrong. But the earnings are going to be, that's going to be interesting.
May even be a black swan event. it's possible.
One way or the other. Days like that, I love having both sides. So,
yes, sir.
Obviously my long is bigger than my short, so I'd much rather it go up, but
right.
Either way, we got something.
As a manager on that, how are you able to take profit and kind of set some cash aside and keep some dry powder to add later, or does it have to be?
No, we've got to be 2x every day.
Okay, so it's got to follow its rules.
Yeah, so we're not actively trading NVIDIA. We're giving it to you as a tool, and you decide.
Right. That's awesome, and it's got to be precarious to balance that, but that's why you have both sides. It really helps. It hedges itself. So yeah, man, I think just my opinion, might see some outflow soon, and up to earnings, it kind of plays right into that target. So I like it for a very short-term short, and then maybe catch a nice dip buying opportunity soon. I could be wrong. It could hold this liquidity zone and rip a face off to the upside too. So, these descending megaphone patterns, as they're called, or broadening patterns, whatever. When they fail, they're rare. They usually have like an 80-20, but when they fail, they can rip a face off, and usually it's a full M. And if this thing finds earnings to be absolutely, ridiculously profitable or positive, holy smokes. So either we get a good opportunity to hold it up here in this liquidity zone and go long, or we wait for the breach of this to go long, or if things fall apart on earnings for at least a short term, we catch some opportunities to buy long down here and ride the rest of that roller coaster. But we've got lots of opportunities shaping up. And I think next week's going to be exciting for picking off some good swing trades. Just to say,
tomorrow could be too. Today could be. It's
that's true. It's definitely a good week to be cautious.
Every day is like Christmas,
right? For traders, yeah. We find some opportunities that just, they do more than speak to us. They scream in our ear. And then when we open the box and get the goodies out, we're the ones screaming. So yeah, I love it. It's like Christmas. That's a good analogy. Couple others to follow up on. NVO. That wasn't the slam dunk trade, but it was pretty damn good. We were pretty much right on the ball with maybe reaching for this 140.50 target, but then again, we did find some liquidity here recently, and we did stay above our liquidity zone, which we were expecting a dip back to. So we kind of played both sides of that one. We were a little cautious going into it long, but we did see the opportunity for a little measured move to play out here, and it did wick to that target at least. So I can say we're mostly accurate on this one. So this would be like one of our ones where we'd say, okay, we did okay.
Lily, which is the one I own,
Right.
is testing the highs. It broke the highs this morning, but it's pulled back with the market a bit.
And we did talk about Lily too, and I liked NVO's setup better for a cleaner break because it was a little choppy with Lily. But then again, we did call out that Lily looked good too. So we can get our own self kudos involved there and kind of
But
relish in it.
NVO is probably the one I'd rather buy right now. I mean,
Agreed.
you could fill that gap. You got the 50-day at support.
Yeah, absolutely. And that's where we're looking is the daily. The liquidity zone, the gap was like putting up that 140, 50 target there. So yeah, I think we were accurate enough on this one. We made a good swing on it, but we could definitely see some more outlook on this one to continue higher. And it did exactly what that descending broadening pattern was meant to do. I mean, to the T. And then there was your breakout qualifier, your test, and then continuation looks pretty good with it. But we could see a little dip back in this liquidity first. So kind of be cautious with this if you're still long in it. Tomorrow could be a very short-term bad day, so to speak, but good day for bears. Be ready. And that's the appointment you get. You have a trade plan, you plan your trade your plan. And, if you haven't taken profits yet, and a lot of people did this morning, it's a good opportunity to have some dry powder and maybe catch a dip, or you can always get back in on a break. So either way, you can still be in the mix. Moving on to get a couple more covered before we end. One other one we looked, NTAP. This is one we didn't really give a bunch of dope on. We were fairly bullish on this one, but we didn't really look at the setup as much as we should, and it was a clean 1.5 for 1 on a daily. I don't know why I didn't dope this chart. I think I just lost interest in it or something. There was something else I was looking at, but yeah, 1.5 is pretty much done.
Too many symbols, not enough time.
Right? That's got to be it. We just didn't dope this thing at all, but the damn thing is just strong, and it continues strong. There might give us a little opportunity for a quick test of support here, which would be right around 131.50 or so. And also, we are on a key pivot here, so maybe we get this reversion trade out of the way. That's where this isn't new money coming in, so to speak. This is covering. Someone shorted it. But I think we could either pup through this, hit the support down here and continue higher, or we could hold here and run back for a short-term day trade back to like 133, 132, somewhere in that neighborhood. Yeah, I wish I would have doped this one better. That's one I missed. We did talk about Microsoft though, and that was a great opportunity. We knew where the regression line was from the old channel that's been there forever. We've been talking about Microsoft probably ever since we started the whole throwing shade at Kramer thing, and he had at one point, I think he said sell it either here or here, I can't remember, but this thing just stepped right on up, made a beautiful play, came back, gave us a reversion trade off of this low here. Again, another broadening pattern. Be cautious in this market environment. And we bounced right to the regression line, rejected just as expected, and probably making a trip back to liquidity here. So Mr. Soft, look for 415 for an opportunity for dip buyers, probably even today, the way things are going. And that's probably what's dragging a lot of the market anyway. What else do we cover? We looked at Macy's. I don't even remember.
I remember looking at Macy's.
Why is that on my list?
I don't know. I
think we glanced at it and said pass. It was one that popped up on a swing trade watch list, and it's like, got better things to do, guys. That's probably what that is. Alcoa was the one we really loved.
I mean, this morning I was thinking Target and TJX would probably be decent shorts. Those both popped yesterday on earnings.
Yeah, we can glance at those real quick too. But when we did talk about Alcoa, it followed through, kind of made an attempt to hit that 3670 reversion target, but kind of ran out of gas about
I mean,
halfway there.
2 cents above the 200-day right now.
So we could see it tap. I mean, we could see it pop off that 200. Watch this liquidity zone here. If we can get back through it, we can finish that reversion trade. But again, this is one of those weeks where you want to be cautious. So, if and it has.
All right, I've got one model that's long and one model that's short. So I'm up $2 on my Alcoa position today. Very nice.
It's better than losing.
Yeah, better than just being long.
True. And we do have a little cautious play involved in this one. So we did break that liquidity zone this morning. We broke it yesterday at the end of the day. We shot through it last week. I think reversion is likely back here to 32.30. We might even see it touch this zone here, and if we do, that's a good BTFD opportunity because I think metals are going to take a turn. And then, not to be the last, but mentioning GDX, I think it is. Yeah. We were talking about going long on that, and here we are, right at our ridge target. So we were looking at breach.
What symbol is that?
GDX.
Oh, GDX.
Yeah. Yeah, we're talking about going long gold for a little while, and it worked out pretty good going into the gold miners. Can we see it come back and test this range bar at like $38? We think maybe.
Yeah, I am short at the moment, but my short model is very close to flipping long.
Agree, and there is a support level right in here too. So like anywhere from 38.50 to 38 is good enough for a dip buy on this thing. But yeah, it could shorten that. But last week we were talking about going long on it, and yeah, we were pretty much dead on with that again. And we did have a little discussion. Everybody's dropping into gold and gold futures and stuff like that for a hedge. Hedges don't make money. Play the miners; they move. It's a go and trade the ones selling the shovels or the ones using them. But the equity or the thing that they're mining for in general, it's a hedge. It doesn't really do much. It's like having too much home equity and not leverage. You got to invest it and make it do some things for you. But at any rate, we did have the classic structure, descending, broadening pattern. It did exactly its thing. It predicted every move on this thing, and it blasted out a full-on 1-for-1 overall. So we did okay on that one. Anything else to mention? Kind of looking into just basically not sitting on our hands, doing some scalps and stuff this week, but I think more or less playing a word of caution. And then Q gave us this really nice pullback and made a full 1.5 for one. Actually, I should have shorted that this morning.
Yeah, no, nothing else I can. I mean, we launched a new ETF last week. I mean, it's not. I don't know that your listeners would be that interested. It's a cool strategy. It's T-SPY. So T as in Tom, SPY.
Okay.
And it's a 0 DTE covered call ETF.
Sweet.
So it just holds SPY, and every day he's writing. I don't run it. We just handle the trading, and in the admin, every day he's writing SPX options. What I think is cool about it is he's a trader too. I mean, he's traded this personally for himself for years. So it's a lot of these covered call strategies out there are just fixed
blindly.
Right. We're blindly writing a call. Like, so for example, I just responded to an email from him just now where he's like, hey, normally, because his call he could sell for a 95% profit right now. Normally I'd take the profit and roll down. I was like, yeah, I mean, you're stupid not to do that. I mean, why hold the call sitting on a 95% profit to squeeze out that last
right?
That last 5%, and the market could go against you too. I mean, I'd roll down, get some more premium.
That's kind of the MO, and option sellers are few and far between with retail, but we're out there, and when you have an opportunity to take, percentage returns that are like that. I mean, like last week we were joking around, and yeah, I had a 2,000% return on the rest of my position. Took a solid 1,000% return on an overnight swing. And it's like you see numbers like that, just close the damn thing. Don't sit
Well, but
there and FOMO it.
also, I mean, I think when you've written an option, it's even more important because you look at the risk reward.
Right.
I mean, I sold my TEM calls this morning. I had a 500% gain. I could have 1,000% gain. But if you've got, if you're up 95% on calls you've sold, you've got
Right.
almost no upside
Right. I mean,
left.
it's like,
Complete downside.
I I've been selling like covered calls and cash covered puts on TNA, for instance, and oftentimes I'll just sit on them for a while, and occasionally I'll just take assignment on them and roll through. But if I see it come down, like I sold a contract for $1 and it comes down to a nickel, hell yeah, I'm buying a close. Most times I'll come down to like 15 cents. I'll buy them back, of course. In fact, today I think I can buy my 44 strike TNA calls pretty damn cheap. They expire next week. But it's when you're rolling a spread and you can nail some incredible numbers, cool. But when you're an options seller, you're always looking for the opportunity to buy to close and move into the next thing because you've got some outlay involved in there anyway. With spreads, I like to do the same thing. So like if I'm long, and I don't really go long on 0 days. Usually I'm going to go overnight expiration if it's Q or SPY or whatever. I'll find opportunities. Like if we get a wide enough range, and only if we get a wide enough range, I'll look at next day expiration outrights, and I'll buy them dirt stinking cheap on the edge at like 4 or 5 cents sometimes. And then when it moves in my favor, anything above 100% for the day, either I'll close half the position and remain the other half by rotating everything above 100% by selling the next strike above it short. If it's calls, or below it if it's puts, and lock that in. So I mean, anything above 100% on your long position is pretty much covering the rest of the risk in the trade anyway. So you're locking it up, and then that way you don't have to FOMO. You have an opportunity to make a killing on it the next day if the whole spread goes in the money, and if it doesn't, regardless of opening range price, you just dump the spread because it'll gain in value in the spread by itself just from open or implied volatility swings in the first 10 minutes of market time anyway. I've had that happen quite a few times where I've legged together a debit spread for a net credit, and then the next day I've been able to take additional credit by just selling the spread as it is, even if the price was moving against it. It's just incredible. You can lock in profit and take more profit overnight. It's kind of stupid, but when you're running a long-term portfolio that sells 0-day options like this, compared to your other covered call ETFs that just sell kind of blindly on longer term, they're looking at monthlies mostly, I think. 0 days are great. So they almost always expire worthless. Worst case scenario, you run like 95% profit on a down thing. Yeah, you're going to buy to close. Why not? So if you're a good trader on that and you trade that in your personal portfolio and you happen to be a manager of an ETF that basically does the same thing, this thing's a no-brainer. It's a moneymaker, and I think personally I like a little bit better premium that I get from TNA. It's a leverage ETF that I trade weekly expiration wheel trades on, but in the 0-day space, SPY and Q are just on point. I mean, you can melt those things every day and just absolutely kill it. If you've got the capital, you can do even better with SPX in your personal portfolio. You can go and sell some 0-day credit spreads on SPX, and since they're cash settled, you don't have to worry about assignment. Those are beautiful too. Just takes a bunch more capital than SPY. So, it's a cool idea. I do like it. It is right after one of many very successful option strategies, and I can see some great potential in this thing. In fact, it made a nice reversion today. I might even grab some of this. But there's a moderator in the Bullish Bears who that's his primary function is he sells 0-day credit spreads on SPX and just kills it. There's also other opportunities to convert those spreads so you can lock them in, just like I do on my overnights with SPY. You can do the same thing with SPX. You can go and walk in outrights, sell credit against them, lock it in, and roll the spread out the next day, and rinse repeat. It's just a damn income strategy, is what it is. So pretty neat stuff. And we get into many details about that stuff in the Bullish Bears. And you ask any questions to us moderators in our group, and we are very forthcoming with every detail we know about how to make those strategies work. And we've rarely met a question we can't answer. So we're the real deal, guys. And thanks again for joining us live here. What else we got? I think that's about it for the week. We're just kind of sitting on our hands and waiting for
I think that's it. Yeah, market's coming back a little bit now.
Waiting for the world to finish shaking so we can take an opportunity. There we go. That's a long doji, buddy. Sweet. Might get some good scalp opportunities in the close too, because if it ranges here, I think I'm going to take that condor position. If it stays in range till about 1 or 2 o'clock, I like it. Cool. Well, until next week, we'll review the few things that we mentioned this week, and then we should see some pretty damn good opportunities next week, I think, to find some great swing trades, especially by Thursday. I think we got a pretty good shot at producing some real winners next week, so stick with us. Check with us every week. We broadcast at 11:30 unless something else comes up. And then I think for the most part, even if we can't get Matthew in here, or if he's got meetings, he gets pulled away or something, I'll at least come in and go over some watch list stuff. It's just not as entertaining because our personalities kind of thrive on each other. We're both cynical as hell and funny, so and we both have an extreme disdain for Kramer. So we don't like Kramer leading the world. He leads people to destruction, unfortunately. Sad.
Yes, he does.
Sorry, we can't poo-poo on him enough. It's just one of these days we're gonna get hell for it, but until then, we can say whatever the hell we want. But thanks again for joining us. We'll be back next week, and be sure and tell your friends. I mean, if you got friends who are trying to learn how to trade or manage their own portfolios, dude, we've got just absolute fruit for you, and we keep popping it off the vine every Thursday at 11:30. So